Welcome to Second Take, the show that focuses on the issues behind the news. New South African manganese miner United Manganese of the Kalahari believes the ferrous metal will recover in the next 2 to 3 years, but rail capacity remains the biggest obstacle. Mining Weekly editor Martin Creamer tells us more. Welcome, Martin.
Thanks, Shannon.
Now, UMK says it's losing 140 million rand of profit margin a year because of poor rail capacity.
Yeah, this is again the story of South Africa. There is a huge case building up in this country for proper logistics, and in terms of Kalahari's logistics, they need rail capacity. And that 140 million that gets chopped off the potential profit line is through trucking. And you know, trucking is not ideal to take manganese ore in the vast quantities of 800,000 tonne a year to 1 million tonne a year from the Northern Cape, from the Kalahari to Port Elizabeth and Durban is really unideal in South Africa, and it shouldn't be, because we've had rail networks here, we've had demand building up, and the Transnet freight rail has not kept pace with that demand. Now we have a situation where the country's opening up to black empowerment. You know, United Manganese of the Kalahari is 51% owned by blacks. This is a majority black-owned enterprise. It is an enterprise that is actually doing well despite the poor logistics. So in other words, you don't have the logistics, but they had the opportunity to extract medium-grade manganese, 38% content, 37% content from a very shallow resource, and they could truck it quickly into market and actually pay for the project. So it's been a wonderful situation where you get a revenue stream as you go. It's not a long wait, but they could be doing much more, but they're constrained by logistics, and they're thinking that next year probably half of their output will be transported by truck. That's the sort of situation that's being reached. So there's a national urgency about this, and I think that when you talk to the people at Transnet Freight Rail, they say we're treating it as a national urgency, but I think there needs to be a lot more communication. I mean, they should be putting out media releases, which route they're going to take, because if you can see, look at the rail route that is taken by the manganese miners at the moment, and UMK, United Manganese of the Kalahari, it's just one of them. It's a small new entrant player. It's a junior player. But if you look at what's building up there, they're going to need a very serious logistical look, and the feedback is that they're not going to go the Saldanha route, which is a very good direct line on which they take iron ore at the moment, and which has ramped up to cope with like 60 million tons of ore a year. So a much bigger picture. At the moment we're only exporting from South Africa about 4.5 million tons of manganese, but they're looking to lifting that to 16 million tons, going to 18 million tons, 21 million tons. So definitely there's a big, strong business case. If you can see that 140 million has been lost to the bottom line of this small company, which is going to be, I think, in 2012 exporting about or producing about 2.7 million tons of ore. If you look at the total picture, the state should be in there and really looking to create wealth through providing the job that it should do, logistics, because nobody else is allowed to build a railway line in South Africa. You can't just go out and build a railway line. The private sector is not allowed to do that. So your only other thing to do is to truck. But when you look at the circuitous route, the second route, so you've got that very good direct route that only takes iron ore at the moment, and the current thinking at Transnet Freight Rail is that it will only take iron ore. It will not take manganese, even though in the industry that was favoured as a route. The bigger players, BHP Billiton, Assmang, they saw this as a direct route, and you should have manganese also go down that line and export it from Saldanha. What is being favoured at the moment is Kucha. So, Siyabonga Gama, the new, he's the returned head of Transnet Freight Rail. He's wanting to go the Eastern Cape route. But he's wanting to produce a heavy haul line out of the very circuitous network that is used at the moment. I mean, going down the route to Port Elizabeth from the Northern Cape at the moment, you're using at one section, I think is about a 50-year-old line.
Wow.
It's not a new line, and passengers trains take priority on a certain section of the line. So
it's slow.
It's inefficient. You've just got to hang back. If there's a passenger train coming, you hang back. You let that go first, then you move on. It doesn't seem to be an ideal situation from my point of view as a South African. I think that we should be out there trying to maximize what we can get out of our the Kalahari manganese field, which is an exceptional manganese field, and the opportunity is there. You can see a new startup like UMK, quickly out of its starting blocks, quickly profitable. What it's lamenting is that its potential profit margin is being eroded by the fact that there's no rail. Not to say that they're not making profit.
Yeah.
They're doing very well because they can do this at very low cost. Trucks on the roads, not a good idea. Everywhere we go, we hear this lament about logistics. Now, logistics is the terrain of the state. I mean, the shares of Transnet Freight Rail, or the shares of the Transnet Transport Group, state-owned, those shares are held by the state president. There's no private sector involvement there. The state president himself is saying, we're going to go on a very big growth plan. It's no good saying that if the people around you can't grow through your own logistics. You've got to get in there. The shareholder of that Transnet must come to the party and start saying, this is what South Africa needs, this is what we must give South Africa, and we must set a timetable for it. Because, well, we can see that the price of manganese is not tracking the price of iron ore and coking coal, which are the steel feed stablemates. It's falling behind a bit because the market has noticed this new ore coming from South Africa. But at the same time, you see in China, the quality of that ore is depleting to a point where 14% manganese content of their ore, which means they have to use far more electricity, which means they produce far more air pollution, both undesirable from China's point of view. South Africa can say to them, look, hang on guys, we can offer you this higher quality of manganese, and you won't use as much energy, you won't have as many emissions. But what can we do when we're not going to get it to port?
Exactly.
So this opportunity is being lost. So hopefully they will try and turn that situation around, and it's about logistics, and more logistics.
You mentioned now that the Saldanha line is only being used for iron ore. Why won't they consider using it for manganese as well?
That's a very good point. I hope there's, the grapevine talk is that it's about politics. I hope that's untrue.
Yes.
But one hears on the grapevine that, the moment Saldanha municipality was lost to the ANC, and Port Elizabeth as a metropolitan area was nearly lost to the ANC, they decided, look, we've got to go to the Eastern Cape because we don't want to lose that support. We've already lost Saldanha as a municipal ANC control of the municipality. We don't want to lose Port Elizabeth as well. So let's get this down to Kucha, which is close to Port Elizabeth, as fast as possible to try and boost that region. I hope that's not the case, because if we start having politics of that nature, that petty nature entering the South African scene, the citizens of South Africa are going to lose out, because we're not going to say this is the best route. We're going to say this is the politically most expedient route. And we know we lived through that era with the National Party. It was disgusting. We don't want to go through that again. When it comes to exports, South Africa Incorporated must come first, not petty politics along the way. So hopefully what I'm hearing on the grapevine is not correct. So I'm prepared to put it out of my mind at this point, but we need to see that there is some firm work on the ground, some shovels in the soil, with regard to the heavy haul line. How are they going to do this? Is it just going to replace the existing line? What is the route going to be? Are they going to have to expropriate ground? What are the implications? Because this is 1,200 kilometers. That's a 12 billion rand investment. It's a lot of money. Do they have that? How will they fund it, etc.?
We need to see it being the benefit of the country, not a political party.
For sure.
Now, what is the outlook for manganese in South Africa in the next 2 to 3 years?
Yeah, I think it's going to go through a rough ride because it's got this low price at the moment of about $4.50 to $5 per ton, whereas it did go up to $18 a ton in 2007, and that's what attracted people to it. So that normally happens when you have a boom situation. People are attracted to the industry because of the high price, and then they produce more, and then the price goes down again. But with this opportunity in China, because of the low quality, there is expected to be a take-up of that 12 million extra tons that we are going to produce in South Africa, which will be of tremendous benefit for South Africa. So we'll have a rough ride over 2 or 3 years, but mining is a long-term business. And even these smaller players, if their cost base is down, like you see with UMK, they can still fly in there, with supplying the market, even though they've got a lot of impediments along the way, and still be profitable. So this is an important area. The Kalahari manganese field, it's like our great Bushveld complex, what it is to platinum and what the Witwatersrand was to gold. We've got this. We need to turn it to account efficiently, and it cannot be done efficiently without logistics.
And government support.
And government vision.
Now, when does UMK expect to commission this mine, and what's the progress so far?
Yeah, well, they've already, they've been producing profits on the run. I mean, it's like quite a success story, maybe for the Harvard Business Review, where you actually make a profit while you're in the project mode. And this
while you're spending money.
While you spending shareholders' money. And it's only been equity funding that they've put in there, and they've tried to minimize the expenditure of that by selling product very quickly and getting a revenue stream. And it looks like they will have paid off their shareholders' loans, and we have said 51% are owned by black South Africans. So, there's an important beneficiary base there. If they are getting it right, and if they can actually do more, they could be producing much more. I mean, if you go down there, they'll tell you we could be producing much more, but we can't truck much more. We haven't got enough rail. So that's a constraint. And then by mid-June, I mean, they're even saying mid-June. They don't say the end of June. Mid-June next year, this mine should be completed. And they're looking to a production rate of about 2.7 million tons for 2012.
Well, let's hope government comes to that party.
I hope so too, Shannon.
Thank you very much, Martin.
It's a pleasure, Shannon.
That's the show for today. Join us again next time for more news and insight into what's happening in the mining world.